Well, it's good to be together today. I'm excited here at our IFM headquarters in Irvine, California. I've got two of my good buddies from our Chamber of Commerce. I've got John Salamy from ResCom Financial Services and Steve Shadell from Choices Realty.
That's right. Thank you.
Glad to have you guys with us today.
Great to be here, John.
Yeah, good to be here.
It's going to be fun. So, there's a lot of stuff going on right now in the media about real estate and lending and interest rates and all this stuff. So I thought it'd be good. We can just take a few minutes of those of us, John as a lender and Steve as a realtor as well, kind of what you're seeing in the market, what your clients are saying, what they're asking you, and maybe some things that we can do or say in a practical way to help our community. So maybe to get started, talk to you for a second, John. Maybe tell us a little bit about yourself as far as the lending business, when you got into it, and introduce.
I first got into it just before the crash in 2008.
Oh, good job.
I worked for about a year and a half, and I got out of it not because of the crash. It happened before, but I got into my own business, and I did that for about 6 years. And then I decided to close it after 6 years, and I, wasn't sure what I was going to be doing. I was semi-retired, and my friend from ResCom, and I was calling him about some information as far as how to proceed in some different things. And he said, well, what are you going to do? Why don't you come back and work for me? And when I worked for him, there were several other loan officers in his office. We had a big office in San Juan Capistrano.
Mm-hmm.
And he was down to just himself. and most of his people were remote.
Mm-hmm.
So he said, you'll have your own office. Come on in. There are a lot more regulations. In 2008 and prior, there were no regulations.
Oh no, this is the wild, wild west.
And I came out of the car business, and the car business is probably one of the most regulated now because at one time it was the Wild West. I mean, you see the Monroney stickers on the cars now.
Yes.
Well, there was a time where they didn't have those.
Mm.
And so if you ask, well, how much is this car? They could tell you anything. You had no way of checking anything.
Yeah.
And it was kind of like that prior to 2008. So I said, okay, well,
I'll jump back in.
And I've been doing it since, that was 2015, and I've been doing it ever since.
Wow, that's amazing. And Steve, on the real estate side, have you always been in real estate, or tell us a little bit?
No, actually, I've been in real estate for about 10 years now. This
Great.
is my second career. Previously, without going into too much detail, was finance and banking, and I was a controller for a large construction company. But anyway, it has just kind of worked out really well. The last 5 years, I've been with Choices Realty, and just quickly, at Wise Choices, we differentiate ourselves with our value proposition. Our goal is always to maximize our sellers' net equity, and we do that by charging a low flat rate listing fee while still providing all the benefits of a full-service brokerage.
That's a very unique, and I have the opportunity, all of us are in the Mission Viejo Chamber of Commerce. We're all fellow directors and board members as well. And so we have the opportunity of hearing each other at Tuesdays, Daybreakers, hearing kind of what we do. And what Steve mentioned, it is a very different way, a different approach that is to the benefit of the buyers. It really does help save money by that flat fee.
Right. The flat fee that I was referring to is our listing fee that goes for the sellers, but we do offer a buyer rebate program where we rebate a large portion of our buyer agent commission with them. We can segue onto that with all the new NAR regulations.
Yeah.
We feel just kind of based on how we've operated in the past that we do have a leg up on what's happening right now.
Yeah.
Traditionally, the buyer's agent's commission was negotiated really by the listing agent and the seller, and it was a contractual arrangement through the MLS, published on the MLS, and the buyer agent and the buyer were really never involved in the detail of coming up with what that rate is. The new regulations now have separated that, where the listing agent is dealing with the seller with just the listing agent fee, and the buyer's agent is dealing with the buyer on the buyer agent commission. The buyer agent commission is no longer published in the MLS. It's a hands-off approach now. The MLS is not involved. But having said all that, it's going to take a little communicating.
Yeah.
But we honestly feel, and this just happened, so we don't have a whole lot of data.
Just last weekend, right?
Well, yeah,
the
13th for our local MLS. The 17th was I think the NAR deadline.
Yeah.
But just last week. But we are still able, as buyer, if you're a buyer agent, you're still able to request help with the buyer agent commission from the seller, and that's through the paperwork and the offer. And we kind of look at it that every loan or every sale transaction in the past is always been a sum of its own parts.
Yeah.
Right. It's always been the top line offer amount less the commissions on both sides, and it's still going to be that way. It's just a matter of how you present it and where the money actually comes from. But the offer itself is probably going to be the same, and it's just a matter of like I say, just communicating that with our buyers.
Yeah, seems like there's more. Obviously, there was nothing dishonest or anything like that, but it seems like there's more transparency up front. The buyers before, like you said, the buyers were pretty much told, "Hey, this isn't going to cost you anything for my services."
But what's interesting, right? But what's interesting is actually the buyer really did pay for that. If you think about it, they're making the offer. The money's coming from their offer. The seller's really not paying that.
Yeah.
It's coming at a net out of that offer. So, the higher the offer, then the more that's available for the commissions. And it's probably going to work out that way still. It's just like you say, it's a little more transparent transaction between the buyer and the buyer's agent on what the buyer agent is really gonna be paying. So for us, like I say, I think we have a leg up. Anything under a million, we've been charging, and this is what we've been doing is just under $10,099.50
Wow.
for any loan under for our buyer agent commission. And now, we've been getting 2.5%, 2% on $1 million, it's $20,000. So we're rebating, basically $10,000 to our buyer agent. Now we'll have that conversation ahead of time with our buyer agent and just say, we're still going to ask for the $99.50, but we can ask the seller and the seller's agent to see how much are they willing to contribute to that dollar amount. And not to go too deep, but I'm thinking our recommendations to our listing, what we've been talking about with our future listings, is that you're probably, as a seller, you're probably going to still want to contribute to that.
I would think so, yeah.
In the sense that you say, hey, let's look at the offer in total.
Yes.
Send us the offer. We'll consider a buyer agent commission. And if you're getting, just one offer, then maybe you do it. Multiple offers, maybe you might have a larger offer with a smaller commission, or vice versa, and you can deal with it that way. But I think we're still going to encourage and have our sellers really think about contributing to keep that pool as wide as we can on what kind of offers are going to come in.
Yeah, that makes a lot of sense. And you think about it too, with buyers and sellers, it's always been the kind of the age-old, the buyer's agent is protecting the buyer, the seller's agent's protecting the seller, which is good,
Right.
what they should be doing. But I really like the opportunity, which should always be there anyway, But now, the sellers need the buyer's agents as well. They bring them more exposure, they bring them more opportunity, and say, hey, here's a great buyer, here's the reason why they might make a good buyer. And so for them to be able to work out something reasonable that says, well, yeah, we'll put that in, and we'll, through the transaction, we'll help cover, the cost of commission and things like that. But now the buyer is aware of that as well, right? Right up from the very beginning, we'll understand, here's how much it's going to cost the buyer. Is that how I'm understanding it? Or how does that...
Yeah, we're going to have a conversation with our buyer and say, in our case, we're going to say, hey, under $1 million, we want $99.50. We're going to write an offer, and we're going to ask the seller to pay that.
Yeah, okay.
And so theoretic, and this is the way really it always has been. It just wasn't really discussed. But your offer is going to be $99.50 higher than what you would have if you had no commission. The issue for the buyer's agents is that in reality, buyer agents aren't going to do it for free.
No,
right? So
nor should they. Yeah,
right?
I mean,
we now, like I said, we are very comfortable in our case where we've already established our base, and our base has always been significantly lower than what the current market is. So we're very comfortable coming into this.
And I think you're, looking at that and talking with different agents too, on the real estate side, those that have already been doing many of the things that you mentioned, showing as much transparency, showing their value in their interview process with their buyers, saying, this is what you get when you work with me and my brokerage. These are the services, right? Educating them up front. And those that have been doing that, the transition shouldn't be that huge.
And that's right? A big part of this on this education part, and I'm glad you brought that up. Is it really part of this whole thing is confirming and what value you're bringing to the transaction. Yeah. What are you doing, and justifying what kind of rate you're charging. So I mean, if you can justify 3%, go ahead and ask for that. See what you can, but. Like I said, we're very comfortable where we're at.
Oh, that's great. Let's switch gears just briefly and talk a little bit about interest rates. John and I are working with those all day long too. Yeah. And, you hear people, sometimes we get asked the question, is now a good time to buy? What's the response to that? What do you tell people sometimes?
Traditionally, when the rates drop down, it puts pressure on the selling price, and it increases the selling price because of the affordability. And when the rates go up, it puts pressure on the housing prices, and they have to come down a little bit. What has happened is because inventory isn't what it used to be, I think we're at 25% of what normally, correct me if I'm wrong, Steve, of what we normally are during the selling season. So we have this perfect storm where the demand is still very high, and even though the rates are going up also, so that pressure that traditionally has been on the selling price isn't there anymore, and so you've got a high interest rate and high prices. So it puts a lot of people, especially new home buyers, out of the market. So as we get a little more inventory coming available, and when rates start to drop, that'll even out. But we might be a little ways from that happening. But we've been in this perfect storm up until now. Now rates are supposed to. The feds are looking at it, and the issue with inflation and everything is becoming favorable, and there's predictions that they may drop as much as a half a point. So when you have somebody that goes, when should I buy? There's a saying in the business, marry the house, date the rate. Because as a buyer, if you get in at a little higher rate than you are comfortable with, when they do drop, you can always refinance. A lot of times, if you've been in a home for a certain amount of time, you're paying down that balance, and when you do refinance, your not only does your mortgage payment drop, but it gives you a little bit more cash flow than you're used to. So we've just got our fingers crossed. We're waiting to see what the Fed's going to do, and hopefully in that time, I don't know, new housing starts have started to pick up a little bit, not where they should be, and so we're just in that situation where if you got a buyer that wants to get into a home, if you can afford to get into it, and that's where we come in as far as showing the affordability, and that's the time to buy.
Yeah.
So.
And I usually, very similar to that, people ask me, I says, when you're ready, are you ready now? Well, I found the house. Steve showed me a house. It's beautiful. I love it. And he's been sending me, on a campaign, different homes that might fit our needs. We found one. It's right in the school district we need to be in. It's got all the shopping we need. It's close to my husband's work, whatever it is. And we qualify. We're pre-approved. Great. Maybe now's the time to buy.
Yeah. That's the time to buy.
And with that being said, like you said, if the rate is here and it's supposed to go maybe here, a little drop there, that's going to cause a big stir, because anytime, even if it drops a little bit, my phone rings off the hook. Hey, I heard the rates went down today. Oh, that's great. Well, let's see what you qualify for, right? With rates dropping, competition increases. And so sometimes people don't understand that. It comes down to affordability. What can you afford monthly? What monthly payment can you afford? The rate may be here, a little higher, but if you get that property for maybe this price and the rate's here, maybe that's an affordable monthly payment. Whereas if the property drops a little bit, or I should say if the interest rate drops a little bit, but the listing price just went up and now it's over offer, another 25, 50,000, whatever. Now that monthly payment might be different. It may even be higher. So those are the things that, the conversations that we're having with people now and with our realtor partners is to, it's by way of education, right? Everything's education.
Yeah.
Teaching people.
And Steve talked about transparency, and education, and you can attest to this, John. We educate our clients because people don't buy homes every day,
right?
So they're not familiar with the process and what goes on, or they've forgotten about it, and it's always changing. So one of our main things when we first talk to a prospective client is to educate them on what the process is, what are the different things that affect the market, and that pre-approval letter to see what they can afford. And I have people that come up and say, we're thinking about buying a house, but we don't know what we can afford. And so that's valuable information. So when you go out, because a realtor's not going to want to talk to somebody they don't know if they can afford the property they're showing them.
What's the first question
So,
you ask?
Have you talked to a lender?
Yeah, exactly.
Are you pre-approved yet?
And that's getting more and more important now than it ever has been.
Yeah.
And so I know when I bought my first house in '85, we had these adjustable rate mortgages. So you could get in, and the whole idea is that you're starting out as a new buyer, but by the time the rate, you're 7 years or 5 years down the line, you should be making a lot more money, so we can refinance you and get you into a 30-year fixed mortgage. So I mean, there's a lot of things going on there, but
let's talk a little bit about helping buyers get into their property, right? So we hear temporary rate buy down programs, and for clarity, not everybody understands that as buyers. Sometimes most realtors understand it. I had a conversation just the other day with the realtor that says, temporary rate buy down, what's that? I was like, this is a good educational moment. Are you seeing the use of that temporary rate buy down program in your transactions, or?
It's always something we consider. it just depends on the buyer and what they're willing to do. I mean, buying points to lower the rate and that type of thing. It's always an added-on expense, and the last thing you want to do is get a buyer into a situation where there's going to be buyer's remorse. A year or 2 years, like, gosh, we should have never got into this. And our job as lenders is to make sure that doesn't happen. And sometimes you have somebody who goes, well, I think we can make that rate. You just, because everybody that I work with, and I know that you would work with, is potentially somebody who can refer more business to you, or somebody who, if they need to refinance or they're ready to move into a bigger home, they're going to think of you because they had a very good experience with you. And any of us that have been in the business for a long time know that you have to take good care of your client, because they're potentially a referral client or a repeat customer.
Absolutely.
And so education is very important, and transparency is very important. And you always try to make sure that they feel comfortable with you. And the best way for somebody to feel comfortable with you is being able to answer all their questions.
Yeah. And about the rate program, if somebody was to use that, the way I explain it is, actually I had a question this morning, a phone call. It says, well, I thought it was a 30-year fix. Is this a variable rate? And I says, no. If you were to use this program, and a lot of buyer's agents are asking me, well, how much credit could I ask? So basically the temporary rate buy down program has to do with, traditionally, since it started, a couple years ago maybe, is the buyer's agent might ask a seller agent for concessions. Mm-hmm. So it could be, maybe it's $10,000 as a round figure, and in advance the lender would have looked at that and said, okay, $10,000, their note rate that they would qualify for, let's just say it's 6%, right? If they're going to do a 3-2-1 temporary rate buy down, that means for the first 12 months, their rate would start at 3%. Then starting the 13th month, or the second year of payments, that rate would go to 4%. And then that third year would be 5%. And then in the fourth year, it goes to the actual note rate of 6%. 4 years from now, I hope we've already refinanced them in the meantime. Mm-hmm. But for some buyers, that 3% monthly payment could be exactly what they need to get into that property, mm-hmm. until, like as you mentioned, the income builds up. But sometimes sellers are like, when the competition's not as much, they're willing to, I'll offer a credit, or maybe we'll negotiate. Let's say the purchase price is $800,000. How about $815,000 is the purchase price? Keeps the home value up. The sellers are happy. Yeah, we'll give you a credit. The buyers are happy. So in certain circumstances, as you mentioned, it could be good for the buyer. Other circumstances, maybe it's not even needed or, wanted. So, but at least it's being offered. Mm-hmm. In fact, I have 3 of them. At that. Yeah, exactly.
In addition to other things.
Yep. And you're offering some value to our realtor partners and even the buyers to say, here's one vehicle. This might help especially if they're cash strapped, they're trying to get into their home, they're tired of renting, they can get into it, but it's going to be a little tight. Well, maybe we can provide some relief in the first 12 months or 24 months of payment. So in fact, I have 2 of them right now that are closing in the next couple weeks here, that the agents all negotiated that, and it seemed to work out good. Let me ask you about this. So small business owners, that's pretty much what each one of us are. We're, independent contractors, right, and things like that. And so to grow our portfolio of business, we may join organizations like the Chamber of Commerce, Mission Viejo Chamber of Commerce for us. Just by way of a little transition, maybe how long have you been in the Chamber? Why did you join the Chamber? What value do you think it offers for folks like us in small business?
Well, I've been in the chamber, I think about 5 years. And the reason I joined was really to just get myself out there and network. I just, this is a business. It's not a behind the desk business, and it's never has been.
Yeah.
Even though some people think it might be that way, it's still a belly to belly business, if you will. And just getting out there and meeting people and getting in front of as many people that you can, and hope you can leverage that into referrals. I mean, so like I said, Daybreakers, I think we have average around 30, people a week. Every Tuesday, that's 30 people that I get to talk about my business to every Tuesday, and that rotates around. There's probably 45 maybe of people that come at least once a month, a couple times a month. So that's why I joined, and I feel like the first year I didn't really participate, other than maybe I went to Daybreakers, but then I realized that the way to really do it is you have to be involved. That's when you really get to know people, and people get to know you, and the more they get to know you, the more they're comfortable referring you. So
build that trust level.
Exactly.
Yeah. How about you, John?
Yeah, I agree with Steve. People like to buy things from people they know and they trust, and the chamber, for me, most of my business comes from the chamber. People that I've met that have either referred people to me or have used my services, and it's about getting exposure. No matter where you live, what city you're in, if you have a small business, one of the things, we always look at advertising and those types of things, but the most cost-effective, in my estimation, is getting that exposure, and one of the best ways to do that is with the Chamber of Commerce. And at least as a business owner, you should look into it and see what the Chamber has to offer. Like in our case, we have a lot of events that we put on so that people, everything we do, like Daybreakers or any of our events where we have mixers or happy hours, those are all networking opportunities. And when you network, when people see you enough times to get to know you, that just increases your chances of doing business. And one of the things I always caution, because when I joined the chamber, I didn't start doing selling mortgages right off the bat.
Yeah.
It took me a good year or so, just participating and getting out there and getting people to know you. And then after a while, people start asking questions about, maybe their mortgage or something, and that turns into a sale. So anybody that's going to go into that thinking, I should start, doing business right away. It's like anything else. You have to farm it. You have to plant the seed. Like if you go into magazines and spend your money that way, in print or radio or TV or that type of advertising, you're spending money and you're not going to get a lot of return immediately.
Yeah.
And you have to have that in your mindset, that this is something I'm going to, work on over the long term. And it does become very fertile after a while.
Yeah, both of you mentioned participation, and me personally, being in the chamber just a little less time than you, John, is participation seems to be a direct link to my benefits. Mm-hmm. The more I put into it, the more we're all volunteers, all of us, right? We have various positions in the chamber and on our board as well. And the more we do, though, and the more visibility, the more people we meet and build meaningful relationships with, so that when they're ready, or usually what happens is their friends or people they know are ready, they refer them to us. So we're always positioning ourselves by just being available, being active, participating, and then the benefits start to come in. They may all come in at one time, or it may take a good while, but that's what I've seen too.
Yeah, it's a funny thing. Since I've been involved in the chamber, you become the guy who knows a guy.
Right.
You know, if somebody's looking for a car, or they need a realtor, or they, they want to find somebody that's reliable in advertising or repairing something or whatever. We have a repertoire of businesses that we can refer to. And whenever you refer somebody, that's a real compliment to the person that's getting the referral, and hopefully they'll remember that you did that, and they will refer you. And that's the way our chamber has worked in many cases, because a lot of our members like to do business with each other.
They do.
And we like to promote each other. And there's a lot of strength in that, because you become a guy who knows a guy. Hey, I need my refrigerator fixed. I know who.
I know a guy.
I know somebody.
I know somebody. No, that's so true. And I would have to say our Chamber of Commerce is, there's a lot of chambers to choose from.
Yes.
In South County, here in Orange County, a lot to choose from. But I will definitely state that, and we've visited different ones. We've interacted with different chambers as well. I feel that our chamber has that real family feel. We don't just do things on a networking or a business level. We do things for fun as well. We'll go out. We'll go out to music. Go listen to Coach Dave play some music, or we do fun things together as well. Which, in addition, when it's time to do business, we do business. But in the meantime, it's that building that relationship, even on a fun level. We get to know people personally. We get to know their families, and what makes people tick. And to me, that's where the real enjoyment comes.
Yes.
Because if the chamber or whatever I do isn't enjoyable, I won't do it for very long. I just won't. I mean, I can. Then it becomes work.
Most people are like that, right? Most people are like that. So, if you have a lot of choices like we do, you need to shop around, just like anything else.
Yep.
And I've always, especially at our breakfast daybreakers, you'll have people that are shopping for a chamber that they think is going to give them the best return on their not their money, but their time, and time is money. And you want to put time into something that you feel it's going to be productive. And when you meet a lot of the people in the chamber, and you feel like these are people that could be referral partners for you, which is basically what it is, that's the chamber you should join. And I know in Orange County there's there are lots. In fact, there's some people that are members of several chambers.
Yeah.
For their business, they have a business like that, and it's the way to go. In my estimations, it's a lot more cost effective than putting money into
very much so.
Advertising.
$20 a month, maybe.
Yeah.
To invest in meeting people and business and all that. I had a question one time, because I work on the membership side with our chamber. How many realtors are in there? Isn't there like 10 realtors or something? I go, so I looked at the list, and we looked, and I said, oh yeah, there's a number.
Yeah.
I said, but more importantly, here's what to look at. Come visit us at Daybreakers. Come visit us at our networking events. Now how many do you see? The ones that are visible,
right,
like Steve. The lenders that are visible, like John, myself, old man mortgage guy.
Yes.
Clark. Mr. Clark. Those are the ones that people remember. Why? Because we're there. We're visible. We're doing things proactively. Doesn't matter what list you're on or what directory you're on. So when people ask me that, I try to ask them, well, what are you looking to get out of joining the chamber? Why are you doing this? What are your expectations? And don't be alarmed if you see, X amount of people that are in your same industry. Come and participate, and you'll be the visible one. Build meaningful relationships. You'll be the one they'll think of first for business.
Yes, that's very true.
So let me ask you this last question here. Again, we're small business owners. We are independent contractors, and there's a lot of other small business owners. We've been through some challenging times.
Yes, we have.
Pandemic, still out there.
Yes.
And just financial times have been very challenging for a lot of us. What advice would you have to offer those who are in small business, those that are trying to struggle to make it, to be successful?
Well, any small business needs exposure.
Yeah.
So you look for ways to get that exposure, and keep bringing up the Chamber of Commerce, but that's one way of doing it without spending a lot of money, and building up that network of people who can refer people to you.
Yeah. How about you, Steve?
You got to find a way to differentiate yourself from your competition. Now, whatever that may be, but you've got to figure that out and then really trumpet that. Like I said, with us, it's our flat fee, and we talk about it all the time. But that's our value proposition, and I just would recommend that you really think about what's your value proposition and how you can differentiate yourself.
That's huge. Both excellent pieces of advice. And I think I would add, for me personally, when I wake up each morning, know your why. Why am I doing what I do? Well, it's because of my wife. I love my wife. I want to take great care of her. We want our families to be well taken care of, have that security. And if it's our parents that we're maybe taking care of too, whatever it may be, we know our why. That gives me the drive to do what I need to do. It gives me the passion to do what I need to do. Roll up my sleeves when times are tough and get out there and do some of the things that maybe I should have been doing all along, but maybe I got busy. My business picked up, and I kind of forgot about some of these other things that led me to that business. So I'm trying to be more intentional about my schedule, about the things, whether it's making some specific calls back to my previous clients, preparing them for a refi boom that's coming back up, we hope, soon. Whatever it may be, marketing things. So being more intentional for me personally, and then knowing my why and really capitalizing on that and not being discouraged. Things are, we've been through this a lot.
Yeah.
Ups and downs of markets and things like
Right.
that. We just can't give up. Those
No.
that have given up, left the business, some of our friends, they've taken other responsibilities, other jobs, and that's fine. But those of us that have stayed in it in some sort, whether it's part-time or full-time, we're positioned to help families, and they need our help more than ever.
Yes.
So thank you so much for your expertise, your stellar examples in the chamber. Both of you are known to be stable pillars in the chamber. You're always present. You're always involved. And speaking as your fellow board member, I appreciate your example. It motivates me to continue to do my best too. But thank you so much for
Thank you,
joining.
John.
Well, I want to thank you, John,
Yeah.
for you are a driving force in the whole chamber. You
Oh,
are
thanks.
doing this for all of us, and we really appreciate that.
Well, thanks. And that is part of the purpose of these podcasts, is to gain exposure for our businesses, various members of the chamber. And where I tried to start was with our board members, who are working tirelessly behind the scenes in many cases, and just to give us a little more exposure. And then also working, I had a nice podcast with Coach Dave the other day as well, and Kim Jones and Dave Leckness, some other folks too. So just really doing what we can, and I think what's the phrase? How do you eat an elephant? One bite at a time. Right?
Very good.
I mean, just doing what we
I'd
can.
like to touch on one other thing,
Sure.
because we are involved in it. Volunteering,
Yeah.
whether it's for your community or in a chamber type situation, volunteering is it's something that comes from the heart.
Yeah.
If you don't consider yourself a volunteer, give it a try. You'll be surprised, because giving is the best form of getting back. Because when you volunteer, you get back so much more than you put into it. And that's what we all do. That's where the people that always show up with, hey, we need some help here. What can I do? Even if it's a small part, it takes a little pressure off, and you get tenfold back.
That is so well said. I know we all wholeheartedly agree with you. Thank you again for joining today.
Thanks
Thank you,
again,
John.